Thank you everyone for joining our call today. We're going to go over the home buying process and what it looks like today. And for 2026, there's some fun changes. And for the Long Beach people on the call, this is a lovely picture of part of Long Beach that if you haven't checked out, you should. All right, a little bit about us. My name is David Sanchez. I am a full-time realtor and I am the team lead for Living CA Realty. And I've been selling real estate for about 8 years now. I focus in Long Beach, also in the LA and OC area, but I live in Long Beach and I love it here.
Hello, my name is Kimberly, and I apologize for my voice. I am under the weather today, but I'm doing a Zoom, so you can't get out of those, right? Also, I now have blonde hair, so that's still me down there. But I got my license in 2019. I'm originally from Texas. I lived in New York City for about 12 years, and then I've been here for about 10 years. So I know what it's like to move cross country. I know what it's like to live in many different places. So I'm happy to help with any needs that you have here or around the United States.
Perfect. And you sound great,
You
Kimberly.
sound great.
Oh yeah,
Yeah.
it's so great.
We're glad to have you here.
And then
Uh,
speaking of glad to have here, Kirk.
Thank you. Thanks for everybody for coming tonight, and thank you both for having me. My name is Kirk Salen. I am a mortgage lender. I work with Nexa Lending, which is the largest broker in the United States. We have a ton of specialty programs and different ways that we can help you. Every loan is individual and custom made for the person who we're working with. So if you have any questions, like David said, please ask them, and no question is unreasonable. We like to hear everything that you guys are wondering, and most likely, if you're thinking about asking that question, somebody else is wondering about it too. So please feel free to jump in and ask, and I'll go through a little bit more what I do as we go further through this.
Perfect. Thanks, Kirk. And then, oh, a little bit about this. So this is a new thing that we added where we're going to be offering $1,400 in perks for anyone that's on the call today. And this will just get you kick-started in the process. When you do get those keys, then you're going to be ready to go. We have Kirk that said that he would provide, if you go with him as a lender, nope, we're not going to tie anyone down to anything, but if you go with Kirk, then he's gonna sweeten the deal. He's gonna give you $700 credit towards the appraisal. Yeah, so we got to get to the closing table first, and then Kirk will take care of that. And then Kimberly and I will also take care of a home warranty. What we usually try to get the seller to pay for it, but if we can't, then we're gonna flip the bill on that. And then also we pay for all clients that we work with on the buy or sell side. We pay for it's called real estate risk management, where you could speak with a lawyer, and it's a subscription thing, and it's something that we pay for out of our pocket because we want our clients to feel comfortable. Of course, we can give you some legal advice to an extent, but we're not a lawyer in the end, so we always recommend if certain things that you want to chat with a lawyer. So we provide you with that. And then Kimberly's going to jump into reasons to own a home.
Yeah, so we find that everyone has a different reason to own a home. It's unique to you, but we see that these six are pretty much universal for most people. And the first two do go hand in hand. So it's equity and appreciation. So equity, if you're buying an $800,000 home with an $800,000 loan, as you pay down that mortgage, you're going to build what's called equity in the home, right? So you're paying down that mortgage and part of that home, that's yours, right? And what we're hoping at the same time is happening is appreciation. So those two things combined when it's time to sell, hopefully will land you with a lot of cash, right? So you're hoping that happens. You're making a profit from your home. Tax benefits. Now, I'm not a CPA, so I'm not going to go into detail about that, but we do have some webinars throughout the year where a CPA comes on and talks you through that. But there are some great write-offs that you can do, and I'm an independent contractor, so I love me a write-off, and that can help you lower your taxes, which is a bonus. And then upgrades. So if you're in a rental, you can do upgrades, no one's stopping you, but the likelihood that you're not going to have to pay for those is pretty slim, right? Your landlord's going to charge you money if you add in, a door here or you paint, right? But when you own your own home, that's not the case. And if the upgrades are done well and they look good, it can actually add to the value of your home. And then we have investment. People always think of your home as an investment. First and foremost, it's where you hang your hat, it's where you live. But it can be an investment when it comes time to sell. You can use that money, or you can turn it into a rental and use the rental income as a way to supply your income. And then stability. Unfortunately, rent always goes up, right? The rent is too high, as they say. But your mortgage is always going to stay the same unless you refinance. Now, taxes and insurance, those things will go up, but that mortgage is going to remain the same for those 30 years. So you have that stability. And the truth is, getting evicted, the evicting process is very short. The foreclosure process is very long. So even if you do run into some financial troubles, you have a long window to be able to save your home and to make things work so that you can keep yourself with a roof over your head. So when you're buying a home, there's a couple of things you want to do. There's some steps. Number one, you want to build your team. It's really important that you have experts around you to guide you through the process, and you want to do this first. Those two people that are really important are going to be your lender and your realtor. We're hoping that we can be those people for you, but if not, make sure you've connected with the people that you like, know, and trust before you start looking at homes. It's super important. Number two, check your score. You do need to know what your credit score is because your credit score affects your interest rate. You might look online and say, oh, the interest rate today is 6.1. Not necessarily for you, right? The interest rate is going to be different for each person based off things like your credit score. So check what that is and see if there's anything you can do to bring that up. That's really important. Boost your savings. I wish we could say that buying a home is $0, but that's not the case. You want to make sure you have savings for your down payment and your closing costs, but also for things that might break as you move into your home because there's not a landlord to call to come and fix anything that breaks down in the home. And then you need to know all those numbers, right? You need to know what mortgage you can afford. You need to know how much insurance costs. You need to know what your FICO score is. And we can help you figure out those numbers and get you on your way to getting some keys. So there's one thing that's really important. So we talked about, getting your realtor and lender. And the reason why those two come together is because you need a pre-approval. Having a pre-approval is so important. Not having a pre-approval is like going to Black Friday sales and waiting in line at 5 a.m. and not having any cash or credit card. You're going to get run over and you're going to walk away with nothing. You have to have that piece of paper that tells you, hey, this is what you can spend. This is what the bank is allowing you to spend. It's really important to have that. You don't want to get your heart broken if you're looking at places that are outside your budget. And you may think you can spend a certain amount, but the bank may say that you can spend less or more. But it's important to find out what that is and then decide what works for you. You have to talk to a lender. They're going to go through a process with you. You're going to fill out a mortgage application. It's the same for everyone in the United States. And then they'll give you that shiny piece of paper, which can let us go home shopping. Now, I'm not a lender, but Kirk is. So I'm going to turn it over to Kirk and he's going to tell you more about what you have to do to get pre-approved and how the process goes.
Thank you, Kimberly. That is so important. And one of the things also about getting pre-qualified is that we can identify things that could cause problems in the process and correct them while you still have time before it gets too late. Some of the things that you're going to need to come up with are just basic identification. So your driver's license, social security card. Financial information is going to be used to calculate how much you can afford. So if you're W-2 and you have pay stubs, we may need tax returns. If you're self-employed, there are other programs based on bank statements or asset depletion, a lot of different options where we can help you. Like I said, every loan is custom made for the individual. So if you have specific things that we need to take care of, then we can match you with the right type of loan for your situation. You need to prove your income. So the lender's going to want to know how you're going to pay back the loan, and a lot of different things can be used to do that. If you wish to use child support, alimony, disability, like if you're using retirement, we'll document all those things. Basically, the bank or lender is going to want to see 2 years worth of income, 2 years worth of your housing history. And that includes like your bank statements, things like that. And if you have retirement income, things like that will be documented. FICO score. Is this one still me? FICO score is a main part of how your credit is measured. And so this is make sure you pay all your bills on time. Make sure that you are working within the limits of your credit range. One of the first things we do when we do a pre-qualification or pre-approval is we check your credit, see where that is, and then we can identify if we need to make some adjustments or things need to be changed. Give you some tools to do that if you need to. And your credit is super, super important. And that is also tied to what's called your DTI, your debt to income ratio. So that ratio basically will tell the lender how much money you have every month to spend on things like a mortgage and still have money left over to live. Types of loans, three of the most common loans. We'll touch on VA. If anybody is a veteran or active military here, thank you for your service. They have a special loan just for you, which is pretty flexible and amazing. If you do have questions about that, you can get zero down payment. There are actually loans for veterans that will help cover costs over the price of the home. So it can help you with closing costs as well. And if you have any questions, please reach out. I would love to help you with that. On the other side, FHA is also a government-backed loan. It is a little bit more flexible, a little bit easier to qualify, and a little bit more forgiving. So like the minimum FICO score on that is a 580. There are programs that go down to 540. So it's like one of those things that every person is different and every loan needs to be custom made for them. So PMI, depending on what your down payment is, can be cancelable, but like I said, it depends on your down payment, which can go down to just 3.5%. And there are down payment assistance programs that can help you take care of that as well. Conventional loans, that's going to the bank, and you've heard people talk about Fannie and Freddie. Those are the basically the rules and conventions for those loans. Most of the time, people think that you need 20% down. That's not true. You can do a conventional loan with 3 to 5%. PMI is cancelable once you hit 20%, so you own at least 20% in equity of the home's value. Minimum FICO score is a little bit higher than FHA at 620. And like I said, there's plans and different types of loans for different situations. And my job is to talk to you about what would work best for you.
Perfect. And then real quick, Kirk, with PMI, could you just
Mhm.
briefly explain what that is? Because I know
Um,
people always ask that. And then also an idea of how much that costs.
Sure. Sure. PMI, private mortgage insurance, it's basically insurance for the bank or for the lender. That is to make sure if there anything catastrophic were to happen, that it's insurance for they're going to get their money back out of the loan. Basically, if you have less than 20% down, you're going to pay some type of mortgage insurance. And it depends on what your down payment is. It depends on what the type of loan that you have. Normally, it's not a tremendous amount of money. It can be like $50 a month. It can go up from there. And like I said, if you have 10% or more down in an FHA loan, then after 11 years, you can cancel that. If you have it in a conventional loan, after you have 20% equity in the property, then you can request that that be dropped as well. And of course, if you refinance either one of those loans and you have 20% equity, like Kimberly was talking about, as home prices grow and as you pay that down, then that combination can bring you to have enough equity to have that canceled.
Perfect. And that's a good question to ask your lender too. How much is the PMI? How much is that? Because sometimes it's $50 a month, but sometimes people, oh, I'm not going to buy a house because I don't want to pay PMI. Sometimes it's not, it's very minimal amount, which Kimberly will get into how much put for down payment, but just something to think about. But always ask your lender, like, oh, how much actually, how much is that going to be?
And the interesting thing about PMI too is that it's a combination of different things. So you have to look at how much extra you're spending per month and how much equity you're building in the home, as opposed to paying rent where you're not getting any of that back. So it's not your monthly payment, and having a discussion of how those work so that you can make sure you make the right decision for yourself is very important.
Of course. Right. And then there's, if you can go into some of these programs too, Kirk.
Sure. Sorry, got
Oh, that's
distracted.
okay. We have an exciting one too that we just added in here too. You'll see that one soon.
Very good. Like I mentioned before, there are down payment assistance programs. Cal HFA, California Housing Finance Agency, has programs for residents of California that can help you to get your down payment. Some of them can even help you to pay your closing costs. So be glad to talk to you about those different programs. And like David said, there's a new one that was just released that hasn't been funded for a while, and it's starting February 24th. You can start to register for it. So this is California Dream for All. So this is an exciting program. It can help you with up to 20% with your down payment or closing costs. This is for first generation home buyers, and it's a very exciting program. The main difference between this and the other college HFA programs are that it's a shared appreciation loan. And what that means is that as the value of your home grows, then when you refinance the house or when you sell the house, then part of that equity is paid back to Cal HFA so they can continue the program for other people. And a majority of that belongs to the homeowner, but that's the shared appreciation portion of that loan. This is on a lottery system, so you apply and then certain people are, it's obviously a very popular program. So certain people will be given vouchers, they'll be selected at random and given vouchers, and then they'll be able to move forward with that program. But there is a limited amount of time to apply for that. So if you're interested, please reach out and we can get you started.
Yeah, that's a great program. So Kimberly and I went to a seminar yesterday that was talking all about it, and it's a good one I would jump on for sure.
Yeah.
And
Uh,
then, oh, sorry,
oh,
Kirk,
go
we
ahead.
always get this question, so I thought this would be a good one to add in there, because everyone's, oh, buy downs, we have different pay down for fixed rates and all that stuff, but if you could touch on that.
Sure. So there's different ways that you can handle different buying situations and different loan situations. And if you have a fantastic realtor like we have here tonight, they can negotiate for you. And one of the things that they can work on is what's called a buy down. And so what that is a temporary buy down of your interest rate, and it's per year. And it's the seller's incentive for buyers to help them get into a new home. So like a 2-1 buy down, it's a 2% discount for the first year, 1% discount for the second year, and then it goes to its permanent rate. So let's say that the interest rates were hovering around 6%. If you had a 2-1 buy down, the first year would be just at 4%. The second year would be at 5%, and then the third year for the completion of the mortgage, you would go to 6. So it's a very nice opportunity to save a good deal of money for the first few years you're in your home. Buying down points is sort of similar. It's not as dramatic. It's usually about 1% of the cost of the loan for about a 1/4% reduction in the rate, but it can help you over time. And the important thing with all of these programs is to calculate how long you think you're going to be in the home, where you think interest rates are going to be, and what's an easy payment for you to make every month. And we'll have those conversations about what combination is best for you. And then, of course, David and Kimberly can help you to negotiate that with the seller. Adjustable more, oh,
Sorry, yeah.
adjustable mortgage rates, sorry, it's what we've talked about. Most of this is a fixed rate, which is that the rate's going to be the same for the entire length of the loan, whether that's a fixed 15 years, 20-year mortgage, 30-year mortgage, or sometimes more now. They do also have adjustable rate mortgages. And what those do is that they're locked in usually 3 or 5 years. And then after that point, they become adjustable to the market. So they will move with the current interest rate of that time. So if you think that we are headed into a space where interest rates are going to fall, then maybe this is something you should look into. And I'd be glad to walk you through and calculate rates for you. This is the company that I work for is Nexa Mortgage. Now there's soon to be Nexa Lending. We work with over 270 different lenders, investors, banks, private lenders, and more. We have, if there's a program out there that you're interested in, we probably have it. And I would be glad to talk to you about that. And we do some pretty interesting things. I also do investment loans. We can talk about house hacking if that's something you're interested in, having a multifamily duplex, triplex, quadplex where you live in part of one and have everybody else help pay your mortgage. We have programs like that, programs like the down payment assistance programs we're talking about, all the way up to commercial lending for multifamily office buildings. So if you have questions about any type of lending, please reach out. I'd be glad to help.
Great. Thanks, Kirk. And then from there, I think this is a good place to go. And we talk about the 10 rules. So these are different things that we want to pay attention to when we are in escrow, because we want to make sure that we can make it to the finish line and we get the opportunity to get your keys. So first one is proceed with caution when you change jobs. So if you have a job right now, I always use the example, if you're a nurse right now and then you go to being a nurse at another hospital, that's perfectly fine. That doesn't scare the lender because, oh, you're going for the same job. But you don't want to go from being a nurse to being a rocket scientist because those are different jobs. The bank sees that as, okay, that's not, we're scared of things that are different. So we don't know if you're going to like being a rocket scientist. So we want to make sure. So with that, proceed with caution. I say until you get your keys, do be careful until you get your keys. When you have your keys, then you could go be your rocket scientist. All right. Next one is don't buy a new car, or you may be living in it. So we want to make sure that I always ask clients, okay, how does your car work now? Does it run? Okay, perfect, good enough. So you just want to make sure that you don't do anything crazy because if you go out and buy a Lamborghini, that's going to throw off your debt to income ratio, which Kirk talked about earlier, and we don't want to do that. So if you have something that works, I would go with it. Don't use your credit cards in excess. So if you normally spend say $1,000 a month on your credit card, that's perfectly fine. You can continue to spend $1,000. Just I wouldn't go and jump to spending a larger amount. Don't go, oh, I'm gonna go on these crazy vacations and have it jump to 10,000 because that's something that's gonna scare a lender. They like to see boring. Lenders like boring stuff. When they see spikes, it scares them. All right, don't spend money you have set aside for closing. And this it should never happen, but people do it. They see, oh, I got all this money in my bank account. Great, I'm rich. Okay, remember that money you have set aside, which Kimberly's going to go into what those amounts are, but you want to save that for the ultimate goal, which is to purchase a home. So keep that. I recommend a second account or a separate account that says your dream fund or your housing fund, something like that, so you know not to touch it. This is not a fun account. This is that boring account where we're going to hold that money. Don't omit any debts or liabilities from your loan application. Really important when you do the application that you fill out everything and don't say, oh, they're not going to find out about that because they usually do. And you don't want them to find out on the last day and then you don't have a house at the end. So it's really important. Just don't be embarrassed on it. Kirk and lenders have heard all of this before. We don't judge you at all, but we want to make sure that we have everything, we have all the knowledge so that we can make the best decision and help guide you. So just make sure you have all that ready to go. Don't buy furniture or appliances. This is a common one because people get really excited. They bought a home. I want to get new furniture for this home. Okay, yeah, that sounds great. Let's do that. But let's wait till you have the keys in your hand and you open that door before you start buying furniture. One example, a story I always bring up is it was a client. Luckily, it wasn't someone I worked with, or it wasn't my client, but it was another person that was on my team, and his client ended up buying $20,000 worth of furniture. It was in the middle of escrow. She was so excited. She got all this furniture, had it delivered to the house that wasn't theirs yet. But because of that, their debt to income ratio was thrown off, and the lender said, "I can't fund the loan now." So what they had to do is return all the furniture from the doorstep of someone else's house, pretty much, and then had to return it. They had to wait 30 days for it to fall off the credit, and then luckily they were able to close. Luckily, in this situation, the seller was accommodating, but it could have gone the other way too. So I always say, just remember, be boring until you have the keys, and then you could do whatever you'd like. Don't apply for any new lines of credit or change bank accounts, do anything like that. Just keep everything boring. And again, no new credit cards or anything like that. But if you do have to get something, discuss it with your lender first. If there's any large deposits, hopefully you have someone in your family that just says, you know what, little Timmy, I want to give you $100,000 and it's going to be to purchase a home. Great. My parents never did that, but if they did, I would have happily taken that money. But what I would recommend doing here is letting the lender know before you receive it, because they're not going to just write you a check and say, "Here, Timmy, buy this house," or put it into your bank account. You should receive it in the correct way, which usually is going to be something that the lender provides. It's a paper that says, "Little Timmy doesn't have to repay us. This is a gift. It's not a loan." And then it goes directly into escrow, and then escrow will take care of it from there. So that's the best way to do it. Again, we want to keep it boring. That's an exciting part, but let's keep that separate from you. Also, not changing banks or bank accounts. Again, don't change anything or it makes it, they have to have a bigger paper trail with that, and you don't want that. And then also not co-signing. So we'll stick with little Timmy here. Little Timmy is, say he's your son and oh, he wants to buy a new car. He's got a good job. He just needs a co-signer. Okay, I would say, Timmy, wait till you have to wait till get the keys to our home, and then I could co-sign for you potentially. Because keep in mind, even if you're a co-signer, that's seen as a liability because that loan is attached to you. Even though, yes, you're the co-signer, but it's just like you getting a loan under your own name because that's really what it is. You're backing that person. So just proceed with caution. I wouldn't do that until you get the keys to your house, and then you could sign for Timmy. All right. I know that was a mouthful, but any questions so far? And feel free to unmute yourself. I know a couple people threw in the chat.
We have a few questions. I think one of them was answered. It says, does having changes in housing or employment in the past 2 years impact your pre-approval, or did they just take note of it? I think we touched on that a little bit, but again, that's something that might, but I think if you talk to someone like Kirk, they can really dive into that and see how it might affect your pre-approval.
Yeah, any changes, talk about them ahead of time. Like David said, if it's like for and it's pretty similar, switch within the same company or same job description, usually okay. Anything that's going to go outside of that, let's talk about it before that happens. And also, we mentioned really briefly bank statements. So if there's any large deposits that where you're going to move money, we got to make sure that happens a couple months before so that banks will want explanations about where that money is coming from. And honestly, it has nothing to do with what they're thinking about anybody involved in the process. There are laws for money laundering that have really strict rules that we have to follow. So just if you're going to make any big changes, let's talk about it first. And we'll make sure that everything is tied up and, like David said, boring and doesn't cause any problems.
Yeah, sorry to
Um,
say your job's boring, Kirk, but boring is good. We
Boring
like
is good.
boring.
Yeah, and someone else said, how about housing programs and grants for first-time buyers? And again, correct me if I'm wrong, but a first-time buyer is someone who hasn't owned their primary residence in the past 3 years.
3 years
Even if you've
or been on
owned
title.
a home before and you sold it, and that was 5 years ago, you're considered a first-time home buyer. And there are so many programs out there. And that's why you want to connect to the lender because he will be able to take your information, narrow it down, say, we have this program. There are some programs like Dream for All that are overarching for everyone, but again, the lenders they have this book of everything and they're able to pick and choose what works for you. So that's why you want to connect. And sometimes different cities, different areas, different zip codes. There's so many different programs out there. There's grants. This is something for you to talk to your lender about and see what you can find. So
Yeah, I
that was
think
what we
that's a
had
good.
in chat.
Yeah, okay, perfect. If anyone would like to unmute themselves, they can now, or we can wait till the end too, and we're happy to do that. All right, perfect. All right, I'm going to talk a little bit about today's market, which is exciting. So you can see on here, I put a little, I like to use pointers here. So we have, this is the last 30 years. You can see it's gone up to, it was pretty high in the 80s. And then it went down, it went up again. Now it's going down a little bit, but it fluctuates up and down. But one thing I always like to point out is that pandemic interest rates are unlikely to happen again. Everyone's, oh, I'm going to wait till it goes back down to 3% or 2%. Hopefully it does. I don't know if hopefully, because there's a lot of things that can happen with that, but there's going to be a lot of people interested in purchasing at that point, which could drive up prices. So all that to say is I don't know if it's ever going to go down there. And if it happens in 20 years, because maybe we didn't learn a lesson yet, then great. Then I'd say refinance at that point, and that would be a good way to go. Single family homes and condo inventory are starting to pick up a little bit. We were so low on inventory for a long time. The last few years, we've been historically low. And then now we're back up to normal levels, which is good. We're at more of a healthy point right now, but we are starting to see a nice increase in that, which is great for buyers. And the sideline buyers, speaking of them, and these are people that have I've had people right now that I'm helping that I helped them a year or two ago, and they're like, David, we're going to wait till the rates drop. They have dropped a little bit recently. So a lot of them have come back into the market. And I'm sure I'm not the only agent like that. I know Kimberly's had the same scenario. We have our evidence there, but know that there's a little bit more competition on here than it was like a year or two ago. But competition's okay. Homes are on the market a little bit longer. I've noticed that lately, single family, the last week or two, the single family has spiked up a little bit as far as interest. We've had a lot of multiple offers. I just got one accepted a couple days ago where I'm representing the buyer, and there ended up being three offers on it. Luckily, we got ours. We won out on ours. But I will say with condos, I've really noticed we have a couple condo listings right now. I've noticed they've been sitting a little bit longer, but also I see that as a good opportunity for a buyer because we could do a little bit more negotiating, which is something that Kimberly and I love to do. As far as grants and down payment assistance programs, we didn't have as many a few years ago. Luckily now there's a lot of programs out there because they know there's a need for it. For example, this California Dream for All is this is one that's being thrown on there because hey, we want to give everyone a chance to purchase a home. So they have that. We just recently had one in Long Beach that we just ran out of money on it. But for a couple of years, we had a Long Beach program where they were giving you $20,000 towards the down payment. So that was a good one. But there's a lot of other cities that offer something similar. I also like to point out that we're able to negotiate sales price and credits right now, which is a good thing. A few years ago, we couldn't do that when the market was so crazy and they got 30 offers because we'd ask for something and they'd say, you know what, kick rocks. I have 29 other offers. We'll just go with them. So now, luckily, these sellers actually do want to close and they want to work with the buyers that they have. So it makes our job easier to try to negotiate some credits, some repairs, and all that fun stuff, which Kimberly will get into in a second. And one thing I always like to say is that the best time to buy is when you're ready. We're never going to come and tell you, like, oh, you got to buy now, or you're never going to have the opportunity to do that. The prices are going to be insane. You might see some of that, some of those doom messages online, but we're not going to tell you that. We're going to give you the straightforward answer. And if now's not the time, that's fine. But if you want to wait a little bit, sure. But we'd love to give you some resources along the way so you know what to expect. One of them being right now, just so you can see, this is the last year where it was in the sevens. And then it went down the other day. Anyone that did see this, it went down to 5.99%, which was the average, which is really exciting. And that's for just conventional. FHA and VA were a good amount lower than that. So that gives us hope, and it seems like they're starting to trend down. All the experts are saying that it's on the way down. Again, not 3%, but headed down to more of a normal level. All right, and then Kimberly, if you want to talk about how to determine readiness.
Yes. And again, like to piggyback off what David said, you really do have to be ready when you're ready. There's some things you have to think about. A lot of times, what holds people back is they look at that mortgage and they say, I can afford this mortgage right now, but I don't have the down payment. So I'm going to wait to save more. To me, I think that's only really a good idea if you know you're going to make all of a sudden a lot more money in your job, because what's going to happen, I have to use my hands here, is you're going to start saving money like this, but the homes are going to go up higher. So you're always going to be behind, right? So unless you can save money faster than the homes are growing, if you can afford that mortgage, is a good time to get in, because like we talked about before, there are down payment assistance programs. There are things we can do to get you in, and you don't have to have that 20%. It's a myth. You don't have to have it. You might have some PMI, but you have a house, which is super cool. So what we find is most people honestly have between 5 and 10%. That's the reality of what we see. So you don't have to have that 20%. Don't let that hold you back if you can afford the mortgage. So that's one thing that you need if you're not having down payment assistance. And then you're going to need money for the inspection. So we're going to help you have an inspector come into the house, and they're going to look at it from the roof all the way down to underneath the house. And they're going to give you a really scary 80-page report that tells you everything that could possibly be wrong with the house right now and in the future. And we can take that report, and then you can decide, and David will go over this later if you want to even buy the house, but you can, again, use that report to negotiate some money back from the seller, which is a great thing. But it's a good way to know, like, hey, this is a good house. And then appraisal, right? So the bank is going to have someone come out and make sure the house is worth what it's worth, and they're going to have you pay for it. But if you use Kirk, guess what? You don't have to pay for that. Yay. So the appraisal is a cost that you need to prepare for. And that appraisal actually is going to go in with your closing costs. Now, a lot of people don't know about closing costs. They know about down payment, but they don't know about closing costs. So closing costs are stuff like appraisal. You have to pay for escrow. There could be up 100 people working on making this deal come together, and they all get paid from you guys, the sellers and the buyers. So you're looking at about 2.5% of the purchase of the home that's going to go to your closing costs. You want to make sure you have that. So if you're putting 3% down, you need that other 2.5% to come together to a little over 5% to make sure that you can purchase the home. And we're going to get to Realtor in a second, but I always like to throw in here that you also need a little bit of savings, right? Because when you move into that house, you might want to buy that new furniture, right? And if you move in the house and the furnace breaks, you're going to need to hire someone to come fix it again. You don't have the landlord coming to save you anymore. So make sure you have a little padding, a little savings, so that you can comfortably move into that house, not worry about anything breaking. But the realtor, do I have to pay my realtor? There's been a lot of change in the industry in the past couple of years. It started in 2024. And a lot of people don't know how we get paid. Most people get paid, they get a check every 2 weeks, direct deposit into their account. I don't know what that's. Do you know how we get paid? Most people don't. We are independent contractors. So we only get paid when we do the job. We only get paid when we close. So we're not salary. We don't get paid by the hour. We're not reimbursed for expenses. I don't have a company card. I've asked David for one. He won't give me one. So if I'm driving around for 30 days and showing you a bunch of properties and writing offers and spending hours with you on the phone, and then you decide to move to Texas, I don't get reimbursed for any of that. I don't get paid for any of that time. And because we're independent contractors, just like if you were hiring a dog walker, you could look and you can see that they all charge different amounts. We're the same, right? So we set the amount that we charge. But again, that's only paid at the end. And in the past, the seller was always paying that fee. So the seller pays that fee and then you don't have to worry about it. And again, if you don't complete the purchase, we don't get paid. Now, things have changed a little bit. And like you might pay a retainer to hire a lawyer and you might sign a contract. That's not the way things are. So if you're talking to a friend, you say, hey, this realtor is making me sign a contract before I see the house. And I say, that's crazy. That never happened to me. That's true. It is something that's new. It was new in 2024. And at the beginning of last year in January, it became law in California that we have to have that. So we'll talk a little bit more about that on the next slide as well. So this agreement is mandatory. It's the law. We have to do it. So you have to have a written agreement with your agent before you go tour any homes. Now, you can walk into an open house. That's fine. But if you call your agent and say, hey, I want to see 123 Main Street, they're going to send over a buyer broker agreement. They're going to go over it with you. Hopefully we will, because it's long and it's a lot of legalese. They're going to go over that with you and have you sign it before they can show you that home. That contract is going to state how long you guys are going to be working together, what services they're providing, and how much they charge. I charge this amount. We're going to try to get the seller to pay for this. If for some reason he doesn't cover it, you will be covering the remainder, but you don't have to. If we're looking at a house and they don't want to pay us, you can say, hey, I can't afford it. And we'll move on to the next one. But we found that most sellers are still paying without any problems. Again, even if you want to do your iPhone, I want to do a virtual tour. I'm in Idaho. We still have to have that agreement signed. So just make sure that you meet with a realtor first to go over that contract. And one more thing to bring up, if you're on Zillow or Redfin and you see a house and you say, tour, ooh, I want to go tour. What time? 2 o'clock. Yay. You're going to show up at 2 o'clock. You're going to meet a Zillow or a Redfin realtor, and they're going to hand you this 15-page contract and say, sign right here before we go in the house. They're not going to take the 20 to 30 minutes that we do, David and I, to go over the contract with you, see if there's any changes that we need to make. They're going to make you sign it and walk into the house. And I promise you're not going to read it. And you can end up owing that realtor a lot of money when you close on that house. So just be careful when you click on that tour button with Zillow and Redfin, because that's going to happen at the doorstep and it's going to be a little stressful for you to sign that right then and there. And I'm going to turn it over to David now to talk more about buying new builds.
All right. Speaking of stressful, we have so new builds, they're really exciting. But one thing, it's not going to be stressful. They're going to say, "Oh, come on in, come into the open, come into this new build is just a new property that it has not been lived in before." And they're gonna have a paper that says, "Oh, just sign in right here." And you don't even need to read that. And what you're signing for all of these places is you're just saying that, "Oh, yes, I want to go look at this property, but I don't want representation. I don't have an agent. I don't want anyone to represent me." And you're pretty much just saying that you're going to be helped by the person that is hired by the builder, which, I personally don't want that person to represent me. I'd rather have someone that's on my team that really cares about me. For example, I had this happen recently. We're actually in escrow. Hopefully, tomorrow we'll be in escrow, but we're working on a property in Chino, and my clients, I went in there with them the first time, which was great. We signed in. I signed in for them, and it was fine. I was able to represent them. Right now, we're trying to work on getting the client free solar. So it's going to be $16,000, a little bit over that, $16,000 off the price, and they're paying off the solar. And then we also were able to get a $31,000 incentive, which was a little bit higher than the normal incentive. So that's something that I was able to negotiate for them versus the other way where, you'd have the builder that's, we're not going to do that. So that was exciting. And I've also had another time that happened, it was a year ago, another new build that I helped in Artesia, if you're in the area. And it was another one where we were able to negotiate the solar, which that one was 28,000 off. So $28,000 off the price. And that's something my client didn't have to pay. And we made sure that there was some things that were not done correctly before. And when we did our inspection, we found there was a lot of things that weren't connected. For example, the dishwasher was not even connected. So little things that you want to have someone representing you. They paid me in the end. The seller is what paid me. The builder paid me. So it wasn't even out of my client's pocket. So I was just a resource that made their job easier. And I got to be the bad guy, and my clients got to just be happy and open the door to their new home. Yeah, so that's my quick thing on new builds. Always bring your agent with you, or else you're just saying, "Oh, I'm gonna go in alone." All right. House hunting checklist. So what I like to say is scout out the neighborhood. You want to check it out during different times of the day. So I check it out day, middle of the day, at night, One example I like to use is if, say, you walk your dog every morning at 4 in the morning or 5 in the morning, bright and early. And, do you feel comfortable walking the dog at that time? Or later at night, oh, you walk your dog at 10 o'clock at night. Oh, do you feel comfortable walking around at that point? Oh, you get home from work at 7 o'clock at night. Can I find a parking spot? Maybe my home doesn't have a parking spot. Okay, can I find some on the street? So for example, in Long Beach, there's some areas of Long Beach where if you tried to find a spot at 7, 8 o'clock at night, you might be driving around for 30, 45 minutes. And I used to live in one of those areas. So not all areas, but no, that's something to pay attention to. So check that out. You also want to make sure you check out just freeway access. I know Kimberly's working with someone right now that wants to be right by the freeway. Maybe not close enough where she can hear the cars buzzing by, but close enough where she could be on it in a couple minutes. Also, different shopping areas, community amenities. If you like, oh, I want to be by a pool or something like that, great. If you like to go paddleboarding like me, oh, you want to be by that kind of area, so you get an idea for that. Another one I like to bring up is using your senses. So this is a good one. I always, whenever I notice something when I'm out with clients, okay, just know that you can hear the freeway from here. Just be aware of that. Or, oh, there's a plane flying over our head right now because we're on a flight path. And part of Long Beach, I've had this recently where I sold a house to someone that literally the plane would fly overhead every day, multiple times a day, and it was literally directly above them. And it was really loud, but they didn't really care. Like they fully were aware of it. Yeah, no problem. We love the home and it's all good. And they're very happy right now. And I guess sound doesn't bother them. Yet someone like my wife she couldn't live there because she can't sleep at all through that. Yeah, so pay attention to that. We also have schools. I like to bring up schools because schools can be loud, especially like elementary schools. Kids have this high pitched sound that breaks glass sometimes. And that's something to be aware of. And I've sold houses to people that right by school. Some of them, they're like, oh, I don't care. I have kids. It doesn't bother me. But I've had some where they're like, oh, wow, you were right. The kids are crazy and they scream. Yeah, so be aware of that. Also, another big one is smell. I know I told you I'm selling one right now in Chino. And while I was there, I said, hey guys, you could smell that, right? Okay, just make sure you're aware of that. A lot of those farms are being moved, but right now it still smells like cow dung, we'll call it. And that's not for everyone. So just make sure you're aware of stuff like that. Also, electricity, if you want to go off the grid, great, but I would be aware of that. If it's someone is off the grid, okay, we might have to get solar or something, or for a lot of new builds, actually, they require solar. So you're going to have that, so that you have to be able to negotiate that. We also have, if there's sewer or septic, a good one that I always check now because I've had some transactions where it was septic and it was a big headache. Let's call it that. Most in our area is sewer, but septic is something you just got to be aware of because sometimes it'll just be this random parcel that has a septic system. And I love negotiating that kind of stuff because we want to make sure that it's in good shape, but we want to make sure we pay attention to stuff like that. And then also, in which we'd guide you, of course. And also, if there is some kind of homeowners association, we want to make sure that we look over all the documentation. And that's the stuff you get, but some of it before escrow, and then some of it in escrow, where you get 100 pages of things to sift through so you know exactly what you're getting into. So that's just a little checklist there. A lot of service providers know that we have someone for everything you need: home inspectors, plumbers, electricians, foundation. I can go on, but just know that we have this as a resource for you. You don't need to go and do your own Yelp, Google reviews and look at all that, which you can, but we can provide you with a nice long list of great people. All right, so this is my favorite slide where this is the process from start to finish. So from right now, today, which right here, this could be you guys on the call. This is you're happy, you're ready to buy a home, great. Okay, so number one, build your team. So right now you have some great lenders that you're looking at on the screen. You have a great lender and then agents. So you have us. So hopefully you could check that off the list. Next one that you're going to do is obtain a pre-approval. So this is where you want to talk to a great lender like Kirk and you want to find out how much you actually qualify for. Because if we're looking at homes that are $1 million and you qualify for 700,000, hey, we could get a nice home for that. But why are we looking at homes that are $1 million? Because you're going to fall in love with that one and you're going to be heartbroken. So I would get that out of the way right out of the gate so that we know how much you qualify for. Then we can start working together after you sign that agreement, which Kimberly was talking about. We could sign the door so that we can actually open the door and let you in and be compliant. And then we're going to be going house hunting, which is the fun part. So let's just say you find the home that you love. And I will say, don't be afraid of that first one that you love, because sometimes people are like, oh, I should have gotten the first one. But sometimes if you go once and that's the one and you know it, then it might be worth going for it. All right, let's just say we write that offer for the home. We have, oh, I just realized what time it is. Okay, sorry, we're gonna go a little faster here. So we have, and if anyone does have to go at 8 o'clock exactly, know that this is gonna be recorded, but hopefully you could stick around. All right, make an offer. We write an offer on this home. Okay, great. We'll walk you through that process. It's about 28 pages that we'll go through with you guys. But let's just say to make this quick, we get our offer accepted. Great, happy day. The next one would be you want to wire your earnest money deposit. This is typically between 1 and 3% of the purchase price. And this is just showing that you're a serious buyer and that you're putting your money where your mouth is. This money goes directly into escrow, and escrow is a neutral third party. They're just the person in the middle, making sure that we're all following the contract and we're playing nice. So we have that. Once you have that, we have our inspection. So there's three main contingencies that I want to call out. First one is your inspection, and then your appraisal and loan. So the inspection contingency, that's your best one. That is your easy way out of the transaction in case you change your mind on something. Say maybe you do smell that thing later and you're like, oh, actually, David, you were right. It did smell pretty bad and I can't live with that. Great, let me know. We'll get out of the transaction. And then you'll get your full earnest money deposit back. This is also our time to negotiate things. So, for example, we find out we have someone crawl under the house. We found out there's some foundation issues. Okay, we could say, we could ask the seller to pay for that foundation. Say maybe it's going to be, we get a quote and it's going to be $30,000 for this foundation that they didn't know was wrong, that there was something wrong with it. So what we would do is get that credit is what we would shoot for. Say $30,000. Hey, when we wrote this offer, we thought that it was in good shape. It's not. We want you to drop the price 30,000, or we want a $30,000 credit for that, or we want you guys to fix it. I usually would recommend the credit. And then let's just say they say, yes, we'll take care of it. Okay, great, we're good to go. They can also say, yeah, I'll pay for half of it. Or they can say, I'll pay for nothing. In California, all homes are as is, so they don't have to do it. But our goal, and Kimberly and I are pretty good at it, is trying to get as much of that as possible so that you got a little more money in your pocket. So let's say they agree to all that. Great. We can remove that contingency, which is our way out in case we didn't agree on everything. Next one's going to be your appraisal. So the appraisal is going to be required by your lender, and that's going to be someone that comes out and takes a look at the property and they give their opinion of value on the home. Say this home is $500,000 and then it appraises at 510. That's great. Doesn't mean you have to pay more. That actually means that you already have 10,000 in equity. That's a happy day and you're going to get that. You're going to get the loan for that full amount. But also could appraise at value, which would be 500,000. Great. That's also good. We'll get our loan. It could appraise under. So if it appraises at 490, now you're $10,000 short. So then Kimberly and I get to go to bat and be the fun guy where we say, you know what, so it's not worth that much. To move forward, we need you to drop the price to 490 because this home is not worth that much. We say it in a nice way that's assertive and gets it done. We try to get them to drop it. They also don't have to though. That's up to them, but you always have the option of backing out at that point. So let's just say in this case, they're like, oh yeah, we'll drop the price. Great, we're good. We'll move forward. And then the last one is the loan contingency. So this is in place in case you do decide to switch jobs in the middle of escrow or you decide to buy that Lamborghini, then you could back out as long as you have this contingency, but try not to do that. But this is why it's there. And if for some reason you don't qualify for the loan, then you use that as a backing out and then you get your full earnest money deposit back. So once you remove your contingencies, that's when your earnest money deposit could be at risk. So you want to make sure you're careful at that point. Typically around there, it's about 5 to 10 days before the close of escrow. So you're almost there. So we're happy so far. Everyone's good. We're going to sign loan docs. That's when you wire your additional money for your down payment. So say you're going to put 10% down for your down payment. You put 3% in for your earnest money deposit. Then you're going to put in the additional 7% at this point. And then a couple days after that, we get the fun job. It records with the county, and then we get to hand you your keys, and you're a homeowner. So that's the process. And every time people are like, oh my gosh, that was so much. And I know it sounded like a lot. Luckily, Kimberly and I do this every day, and so does Kirk. So no, we will walk you through this, but we like to give you everything so you know what to expect and there's no big surprises. All right, speaking of surprises, no surprise is that we have a lot of great reviews. You guys can look on Google, Yelp, Realtor.com, or Zillow, and you'll see we have plenty of reviews on here. So check those out at your leisure. We are going to be offering these perks for you. If you take out your phone, this is the easiest way. So take out your phone and then scan the QR code. So you go to the camera. Whoa, drop my phone. But go to the camera function, or you can go on the website and type in livingcalocal.com. And then you could just, this is locking in those perks. So if you decide, you know what, I'm not going to buy today, but I want to talk to Kimberly and Kirk in 2 years. Great. As long as we're still around, hopefully we are, then we'll be happy to take care of that for you. And we're gonna honor this. But this will put a timestamp on it, knowing that, okay, yes, you were at this call and you made it to the end. So thank you for that. And then same thing with the home warranty, we'll get that, and then your real estate risk management. So all these, make sure you take care of that. And then Kimberly, maybe you could just throw that in the chat, livingcalocal.com. All right. And then every time we have people on the call that are like, okay, actually, I hate California, or I don't want to live here because it's expensive. I want to go to Texas, Tennessee, wherever. Know that we know people in those areas too. I have a client right now that actually is selling his property in California. And so, well, in Carson, it's coming up. And then he's moving to Texas because it's half the price. He's going to be able to buy two houses for the price of one. So he's going to do that. And I have him connected with an agent over there. So know that we have people that we can connect you. And then if you need to buy, you need to sell to buy, know that it's an interesting transaction that Kimberly and I have dealt with before. I know Kirk has too, and there's different ways that we can do that with different types of loans and ways that we can write up the offers. So just know that we can help you walk through that. And then every time we have someone on the call that is, oh, actually, I want to do that myself. This looks easy. I can do it. Okay, then talk to us. We'd be happy to chat with you. Or if you just happen to be another agent that's trying to steal our slides and do it on their own and teach people, you know what? Hey, there's enough room in this world for a lot of us to be successful. So we'll share the slides with you. Just reach out to us and and we can do that. All right. And then joining our community, know that if you scan these QR codes on here, if you look on top, I have a lot of different groups and I focus in, again, LA and OC area. And we do, well, this call, we have different calls that are going to be talking about tax benefits and inspectors. But there's some fun ones. And we also have something fun, which would be like, oh, paddleboarding or golf. So if you are in the area, Long Beach, LA, and OC area, we'd love to have you there. And then Kimberly, if you want to quickly talk about your groups, because yours are arguably better than mine. You're very creative.
Yeah, so I do run two meetup groups. I learned from the best. So the first one is Long Beach Alcohol-Free Activities and Adventures. I think some of you came from there. We do weekly events. You don't have to be sober. We just don't drink at the events. You come as yourself. You don't have that crutch of alcohol. I drink usually myself as well. And then I have Furry Paws and Big Hearts. It is a dog meetup. I do about once to twice a month. All dogs are welcome as long as they're friendly. And we do different things around Long Beach. We go to restaurants, we do hikes, all kinds of fun stuff. So yeah, scan those QR codes. We'd love to have you in our meetups. A lot of people are, a part of David and my meetup. They go back and forth. So we'd love to see you there and get to know you better.
Yeah, we're all nice and we'd love to have you there. All right, well, thank you again for joining the call today. We're going to do a quick Q&A, but before that, and I know it's a little late, but thank you for sticking around. If you guys do follow us on Instagram, or if you don't, this is a good time. You could just scan that or take a screenshot of this. This also has our phone numbers. Those are our real numbers. It's not going to some bot. If you text me right now, I'll reply after the call. So know that you have our info. And again, good place to take a screenshot or a photo. And then you could follow us. We post a lot of different, I posted some stuff on an inspection I was on today. So if you want to check that out, and we post a lot of educational stuff. And you could see we're humans too. We're not just robots that sell real estate. We also have lives too, and you can learn a little bit about us. But I promise we're fun. And then Kimberly is, even when she's not feeling well, she still has a lot of energy. And
And,
yeah.
and thank you again for coming and dealing with my croaky voice. Some people say it's sexy when you sound like this. So hopefully I got that going for me. But we appreciate you being here and signing up and sticking through the call. If you have any questions that you don't want to ask out loud once we stop the recording, you can always text us and we'd be happy to help or call, or we can set up an appointment to get on a Zoom or a call as well too. And Kirk, I'll let you wrap it up.
If any of you are interested in getting pre-qualified and seeing how much house you would qualify for and talk about how to get there, you can go to kirksalin.com, or I'll actually put a link to application in the chat. Feel free to reach out anytime, ask me any questions, and we can talk about what program works for you and get you to reach your goals.
All right, great. Thank you all for joining us. And then I'm going to turn off the recording right now. So if anyone wants to stick around and then you could ask questions and not feel any pressure to have your voice recorded,